Good evening, this is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa with the weekly market wrap-up for September 14th. A couple of highlights this week. Number one being the Fed announcement with the stimulus package come out Thursday afternoon with Mr. Bernanke speaking on that. And two, the other highlight this week was the USDA crop report, September supply and demand update that came out on Wednesday. First in the Fed stimulus package, talking about $40 billion a month in mortgage-backed securities that the Fed will back up. This will go on for an extended period of time, that there's no time limit on that. That was a lot different than what many in the financial sector were looking for. This created in late week a pretty good run in the stock market, and also a risk-on type mentality in commodities, whether you're looking at corn or cocoa or cattle. Everything seemed to have a little bit of lift off that news. Also in that remark, the Fed talked about interest rates remaining very low through 2015. So extended period of time, all the way from 2008 now to maybe as long as 2015. Quite an extended amount of time frame there with the low interest rates. The other thing that created in that, we've seen the dollar show lots of weakness this week. The dollar, I believe, is at the lowest levels we've seen since last November. Good rule of thumb in the macro part of the commodity market, when the dollar's lower, we tend to see commodity prices rise. Again, the USDA crop report on Wednesday, no major changes there. But from a nutshell, looking in the background, soybeans lost 0.8 of a bushel nationwide, 4 bushels out of Iowa, I believe 3 out of Nebraska. Those were the key ingredients for lower yields. That gave the bean market a little bit of a boost coming out of the market on Friday. Corn on the other, on Wednesday, corn on the other side, we lost about 0.6 of a bushel on yield, according to USDA on the report Wednesday, down at 122.8. But the market's trading something closer to 120. A little disappointing for many of the traders on that reported number. So the corn market has kind of, again, stagnated. The supply side of this market, or the supply news of this market, seems to be a stale ingredient right now. It has been since the first part of August. We'll talk more on that in a second. For the week, December corn is down about 17 cents. The soybeans were up 3 cents, and wheat up 20. Along with getting back in again to the Fed numbers, crude was up almost $2.50 this week. Keep in mind, inflation might be sneaking back into this market a little bit, and the stock market had a big up week also because of the Fed announcement, up nearly 35 points on the S&Ps. Cattle market, pretty good cattle trade this week, a little higher, 126, 127 in the south, 196, 197 in the north. Packer margins are in the red, which may cut down production next week. Also keep in mind, this week the cattle market, from a technical standpoint, both in the October to December, hit 6-month highs, which is very positive. So technically the cattle market continues to look solid in some eyes, with a little break here on Friday, potentially overbought. On the other side of the equation, in the hog market, there's talk the hogs could be a little oversold. We did see a technical bounce in the hogs this week, with the nearby hogs up almost $2.50 on the week. So the spread between the hogs and the cattle right now are about as wide as we've seen, and the relationship of that with the enthusiasm in the hog market versus the cattle market from a psychological standpoint of the producer is reflected. Feeder cattle were up big this week in the cash market, nearly $10 in many areas. Getting back to the grains, from a standpoint of what shows the leadership right now, coming out of Wednesday's report, the bean market seems to have the leadership because of that potentially exceptionally tight carryout as we go down the road. Robust demand, especially out of China. We have in the range of about 75% of total export commitments year to date. Here we are in the middle of September, compared to what we're going to ship for the whole year. So this carryout scenario will be big. The other thing to watch in the beans is South American weather as the growing season progresses here over the next several months. Wheat tends to follow the outside markets better than the other commodities when you have a risk-on trade. That's going to be a key thing to watch in the wheat. Also the Australian weather. Corn is a little more stagnant right now. We're in the middle of harvest. Even if this corn crop is 10 billion bushels, 6 billion bushel, that could come out of the field in the next 3 to 4 weeks. That may add to some of the seasonal pressure you could see in the corn market. It may be the lagger or the follower right now here short term until we see some new news come out of the corn market. Upcoming reports next Friday, the September 21st, cattle on feed update will be coming out. September 30th is a fairly big report in the grains. It'll be a quarterly stocks report, which will reflect the stocks as of September 1, or the final carryout of the 2011-2012 crop. If you have any questions on any of these markets, as usual, feel free to give us a call here at the office in Cedar Rapids. Phone number is 800-373-2525. Or feel free to watch this video or visit us on the website, BIScommodities.com. Have a great weekend, and thank you.